Welcome to Markets Now. I'm Michelle Rourke with Brad Kooima with Kooima Kooima Varilek, and we're seeing just about everything lower except for the cattle market this morning. And Brad, after the cattle on feed report placement number being above expectations at, I believe, 108, I thought maybe we would see a little weakness, but the market is really handling it well.
We had to be up on early and on time to see that. Thanks for having me on, Michelle, by the way. Because we did open lower, and it didn't last very long at all. It's really healthy action here for the first hour or so. But to go back to your question, yeah, the placement number, and let's dig back into that deal a little bit, right? The placement number, we were vulnerable to this type of a number, I thought, this month because we are comparing to a historically low number. In fact, the number that we got this time, just to give you some perspective, is still 98% of the 5-year average. So actually compared to the 5-year average, it was down 2%. But last year it was so small in July that you're going to get caught up in this thing. Now I get it. I dig into these reports more than most, but it is a monthly report. And for me, I'd trade 3 monthly reports if they'd have given me the July inventory report. Way more information on those semi-annual inventory reports, but for lack of $500,000 of appropriated money, the USDA couldn't find their way to do it. So it's 1 month. It's a matter of timing. We place them 1 month. We don't place them the next month. I don't really see that report was terribly significant. By the way, we still market many more cattle than we placed. Still have a healthy movement of cattle in that regard. And I, just from a future standpoint, my perspective coming in here this morning was, okay, so we broke $15. We got a report that's a little bit negative. We got a futures market that's way discounted still to the cash market. I think maybe that after we're going to have the Great Recession, we're going to have all this, and we may still, Middle East conflict, uncertainty with all the politics that's going on. I thought that, well, you know what? Maybe if we're lucky here, maybe all those people that wanted out of their long positions are out. You've taken the open interest down to real low levels again, so we'll see. I love the action so far. Let's hope. I'd ring the bell right here. I'd be delighted to have October cattle 200 higher.
Yeah, and I already messed up because I think the placements number was actually 106. It was the marketing is that we're 108, so I got that flipped around. But needless to say, talk about the state breakouts here because there's some significant things that we are watching up in the north.
Well, yeah, I'm kind of a nerd about that. I guess I hinted at that. I smile because I enjoy the fact that the movement of cattle here for the last year or maybe more has been moved back toward my backyard, the north, particularly Nebraska and Iowa. And this month was no different. On-feed numbers in Nebraska, 102. On-feed numbers in Iowa, 102 versus like a Kansas, which is 94%. Texas is 101, so that's okay. Colorado has been one of those outlier. They're a significant state number-wise on cattle, but Colorado is nearly a non-reporting state because they never have enough. They fail for confidentiality all the time. Largely a formula type state, right? You saw their numbers drop way off. And finally, this time their placement numbers started to pick up. So it looks like they're trying to engage. But the placements in Iowa up 10%, placements in Nebraska up 6%. Nebraska had a monster marketing number too, by the way, at 111%. But to your question of generally, we're seeing some of these cattle move back to the north, and it's kind of interesting. I got a couple ideas why. I think for a while there, when you had a higher price cost of gain than we do today, but we had a higher price cost of gain for a while, and because of regional imbalances in supply, and because of the freight constraints, is how much freight is. Basis levels for those guys in Texas and Kansas compared to someone, say, in Nebraska and Iowa, where the source of corn is and where the ethanol byproduct is, really created a lot higher environment for their cost of gain. So I think that's part of it. And I think the other part of it is we get more. At least we have. Yeah. And I think we get more because we negotiate. And that's what I think. So.
Yeah, definitely the north has been running premium to the south, and that's been true of the cash market, although we've been down the last few weeks in cash. Do you think we can kind of bottom that market this week?
I was dumb enough to say out loud that I thought the low week was going to be last week. I'll stick to that. If we had a big supply of cattle in the north, and or if we had a bunch of overweight cattle and didn't feel like we were very current, I'd be much more concerned. the opposite is what the case is. We do not have a big supply of cattle here at all. And you'd have to hustle to find a set of cattle that weighed over 1,500 pounds. That's how current we are. The currentness factor reminds me of 2014. Now, I'm not saying that that's going to be what we do this time, but I don't know. Old saying that I got stuck to my side of my desk here. The beginning and the end of all markets start in Iowa. And I just don't see here that there's enough problem cattle to create a bigger problem. And we're off our highs now. So, and the futures got another discount in. What we've done here is we've narrowed the spread also between North and South. And I think that's because the South is cleaning up and their supply is starting to tighten up just a little bit too. We could have some demand worries here, Michelle. I mean, historically, the 10 days before Labor Day is kind of the peak of the boxes. We'll see. The boxes seem to be hanging in okay so far.
Yeah, no doubt. And as you said, we've had like a $15 break in the live cattle. Feeders have had a much bigger break. Do you think that market has stabilized here, especially when you got new contract lows in the corn market? That should help.
Always used to. And the feeder cattle futures have a bit of a disconnect too with the feeder cattle cash. Talk to somebody who's been at sale barns even last week, and they would tell you that a good yearling type steer in the north here still brings a pretty good price. Not like they were, but still a price that's premium to where futures are. Feeder cattle are. So we're $45 off the highs on some of the months. Last year was 50. Remember that? We've gotten some volatility now on this feeder cattle contract that's crazy. And there's probably a couple of reasons for that too that we don't need to go into this year. But I think, if the fats turn and we start to clean up the cash cattle, feeders will be quick to follow. This is the time of the year, of course, where the big northern run of yearlings happens. Normally, seasonally, we would lose a little ground, feeders to fats. We'll see. I guess I feel like after this big a break that the feeder cattle would have a better chance at rallying from here.
This pattern, though, pretty similar on both live and feeder cattle futures to 2014.
Thank you for that softball question. I've been talking about it for 2 or 3 weeks. Spooky how close it is. 14, we bottomed August 20. This year's, low is the 21st of August. Weird, huh? 25th of July was the peak, 28th this time. Anyway, so you'd say for every ship at the bottom of the ocean, there's a room full of charts. That didn't do them any good either. That's one of my favorite sayings. But why do I dwell on the 14? Because there is some similarities fundamentally and technically. The charts are very almost mirrors. It's weird. But the other thing I thought that fundamentally was significant is in 14, we were going into tightening supplies and we were current in the north, which is what I think the case is now. To me, the supply for the end of the fourth quarter and the beginning of the first quarter is much less than it is now. Okay. And I read some stuff where people are worried about, this excessive. I don't know what they're thinking. If we start to hold heifers, we fed every heifer for 2 years. Not everyone, but we fed a record amount of heifers as a percentage of steers for 2 straight years. Either these guys got to hold some heifers here or they're going to go out of the cow calf business. So that's kind of my story. Now there's black swans, there's demand worries, there's my disclaimer. But from a supply side standpoint, I think this thing's okay.
Yeah. A little pressure in the hog market this morning, but we had a chart breakout last week. We had a higher weekly close. How much of that was the futures discount to the cash versus maybe some unwinding of these cattle and hog spreads because cattle were going down?
Well, I think you make a great point. The hog thing has been inundated with this bearish, horrible, big fund short position. Seems like we've talked about that for a long, long time. Believe it or not, there is a couple of algorithms that trade that cattle hog spread. I don't know. It looks to me like I think I'd rather play in the middle of the freeway. That is so volatile. But there is absolutely a pattern, I believe, at least when one market is sharply higher or lower, that there's always that offsetting position in the other. So when you saw that sharp break in the cattle, it made sense, at least to some of us here, that there was a lot of selling of cattle, buying of hogs going on with those algos. So I think that was part of it. The other part of it is, I think, if you recall, 2 weeks ago or so, 3 weeks ago, we were worried about the Great Recession, right? That was what the part of the tip over on the cattle was. Well, old timer here, but the recession is actually supportive to the hogs. they have a tendency to rally during tight economic times because of a elastic demand for an economical product. So I think that might have been part of it as well, Michelle.
You bet. And grains lower. We have not made new contract lows in soybeans yet, but we have in the corn market. How much lower does that market need to go, do you think, here?
Well, 365 is the next spot for December corn that I've got circled on my chart. It doesn't have to go to there for me, guys. I'm sympathetic to the idea that this crop is being advertised as maybe being a little better than it really is, but we'll see. I am encouraged by note the increasing in demand. Now, maybe it's more of a soybean story right now than a bean or corn deal, but and you notice the big increase in the exports here the last while. So, low prices do generate better demand. I don't know what to tell you, corn guys. I can't believe there's a lot left to the downside because of increasing demand. But yeah, it's not easy to bottom in August. Maybe we rip another page off the calendar. Often we make a low of a big crop a little bit early ahead of harvest. So let's see if we can't pull that off in September.
Yeah, and this is the week we ramp up into first notice day. This is where we usually kind of flush everything out, don't we?
Yes, absolutely.
Yeah. All right. Thanks so much for joining us, Brad Kooima with Kooima Kooima Varilek. That is Markets Now.